Okay, so I've been looking at charts for years now, and I mean really looking at them, not just glancing at the price, actually studying them, and I started noticing something weird. There's this pattern, this very specific pattern that shows up before every single market crash. And I mean every crash. 2008, 2018, 2021, all of them. And here's the thing that's been keeping me up at night. That exact same pattern is showing up right now, in 2026, today. I'm not saying the market's gonna crash tomorrow or next week, but the warning signs, they're there, and most people don't see them because they're not looking. So I'm gonna break down exactly what this pattern is, show you historical examples, and then show you what's happening right now. Because if you can see the pattern, you can protect yourself before it's too late. Alright, so the pattern has 4 stages, and they always happen in this order. Stage 1, optimism. The market's been going up. Maybe for a year, maybe for 2 years. People are making money. Everyone's feeling good. You hear stories about people making fortunes. Your uncle suddenly knows about crypto. Your neighbor's talking about stocks at dinner parties. During this stage, the mood is positive. Nobody's worried. Everyone's like, this time is different. The rules have changed. We're in a new era now. That's stage 1. Pure optimism. Stage 2. Euphoria. Now the market's been going up for a long time, and people are not just hopeful. They're euphoric. They're giddy. They're making life decisions based on wealth they haven't actually secured yet. People are taking huge risks. They're going all in on single stocks or single cryptos. They're borrowing money to invest. They're talking about retiring in 2 years. They're buying things they can't afford yet. During this stage, you also see something else happen. The media starts promoting it. Mainstream news is constantly talking about the bull market. Celebrities are talking about which crypto they bought. Everyone's a financial genius all of a sudden. This stage is dangerous because it's when people's guard is completely down. Stage 3. This is where things get weird. The price starts to slow down. It doesn't crash. It just slows. The gains get smaller. The volatility gets higher. But the optimism doesn't change. People are still bullish. They're like, oh, it's just a pullback. It's normal. It'll bounce right back. But internally, the smart money is starting to get out. The people who got in early are taking profits quietly. They're not shouting about it. They're just leaving. Meanwhile, retail investors, normal people like us, we're still coming in. We're still buying. We think we're getting a discount. Stage 4. Capitulation. This is when everyone realizes at the same time that something's wrong, and they all try to leave at once. The selling accelerates, the price crashes, and it crashes hard, sometimes 30%, sometimes 50%, sometimes more, and suddenly everyone's broke, or at least feels broke. People lose fortunes, life plans get canceled. It's bad, but here's the thing, this pattern is predictable. You can see it coming, if you know what to look for. Let me show you 2008, the financial crisis. From 2003 to 2007, the housing market went crazy. Everyone was optimistic. Banks were lending money to anyone. Celebrities were flipping houses. Your neighbor had 3 investment properties. The media was constantly talking about real estate wealth. Real estate agents were making fortunes. Everyone thought real estate could never go down. That's stage 1 and 2, optimism and euphoria. Then from 2007 to 2008, things slowed down. Prices stopped going up so fast. But people weren't worried. They thought it was temporary. Real estate always comes back, they said. That's stage 3. Then 2008 hits, and suddenly everyone realizes the whole thing was built on lies. Subprime mortgages, banks lending to people who couldn't pay back. It all comes crashing down. Prices drop 40, 50, 60%. People lose everything. Millions of people. It was catastrophic. But if you looked at the pattern, you could see it coming. The slowing growth, the media promoting it harder and harder. People getting more and more confident. All the warning signs were there. Now let's look at 2021 crypto. From 2020 to late 2021, crypto absolutely exploded. Bitcoin went from 10,000 to 60,000. Ethereum went crazy. Every altcoin was mooning. The media couldn't get enough of it. Elon was tweeting about Dogecoin. Celebrities were promoting NFTs. Everyone and their mom was getting into crypto. That's euphoria. Then from late 2021 into 2022, things slowed down. Bitcoin stopped going up, actually started going down. Altcoins crashed, but people were still optimistic. They were like, this is just a correction. Bitcoin's going to 100,000. They were buying the dip, still hopeful. That's stage 3, the slowing, the hope that it bounces back. But it didn't bounce back. It kept getting worse. And then in 2022, the capitulation, the crash. People lost billions. So many people got liquidated. Anyone who could see the pattern saw it coming. The euphoria stage, the slowing stage, it was all there. So now let's talk about right now, 2026. We've been in a bull market for a while, since like 2023. Stocks have been going up, crypto's been recovering, AI stocks are mooning, the economy's feeling good, people are optimistic, and I'm seeing the exact same patterns. Stage 1 and 2 stuff. Optimism and euphoria. The media's talking about AI non-stop. SpaceX IPO hype. Crypto's back in the news. Everyone's suddenly talking about which stock they're buying. Your uncle's got a Robinhood account now. That's the euphoria. That's the warning sign. But here's what's also happening. The growth is slowing. Stock market's been flat for a few weeks. Crypto's been ranging. The big gains aren't happening as fast. But people aren't worried. They're still bullish. They're still buying. They're like, this is normal. It'll bounce back. That's stage 3. That's where we are right now. Now does that mean crash is coming tomorrow? No. Could be weeks. Could be months. But the pattern is there. So what do you actually do? How do you protect yourself? First, you pay attention. You watch the pattern. You ask yourself, are we in euphoria? Is the media constantly promoting it? Are people taking crazy risks? Second, you take some profits. Not all of them, just some. Lock in some gains. If you're up 50% on something, take 25% off the table. Secure some wins. Third, you diversify. Don't have all your money in stocks. Don't have all your money in crypto. Spread it around. Bonds, cash, real estate, stocks, crypto. Diversify. Fourth, you prepare. Have cash on the sideline. When the crash comes, and it will come at some point, you want to have cash to buy the dips. And fifth, you don't panic. When the crash happens, don't sell everything. The people who panic and sell at the bottom are the ones who get destroyed. The pattern is real. It's predictable. But you gotta know what to look for. This is the stuff most financial advisors don't talk about because it scares people. But if you know the pattern, you can protect yourself. Subscribe and turn on notifications if you want to learn how to actually read the market, not the hype, not what the media is selling, just the actual patterns that matter. The difference between people who make money in markets and people who lose money is usually pattern recognition. Can you see what's actually happening versus what everyone's telling you is happening? So yeah, subscribe, stay sharp, and don't say I didn't warn you.